Have you ever wondered about the best ways to invest your money? Let's explore 18 diverse and promising investment strategies, each with its unique benefits and potential returns. From traditional stocks and bonds to innovative options like cryptocurrencies, we're covering it all. First on our list is stock investments. Picture this: owning a piece of a company without having to go through the hassle of starting one. That's essentially what stock investments are. By purchasing a company's stock, you're buying a small piece of that company, becoming a shareholder. The beauty of stock investments lies in their potential for high returns. Historically, the stock market has provided some of the highest long-term gains, outpacing other investment options. But like a roller coaster ride, the stock market comes with ups and downs. It's not for the faint-hearted. In the past decade, for instance, the S&P 500, a benchmark for US stocks, has seen an average annual return of around 7%. But remember, past performance doesn't guarantee future results. Investing in stocks requires research, patience, and a willingness to weather market volatility. But if done right, stock investments could be a game changer. They have the potential to significantly grow your wealth over time. Next up, we have bonds. Bonds, in the world of finance, are essentially IOUs. They're a type of loan you give to entities like governments or corporations. In return, they promise to pay back the initial investment along with periodic interest payments, known as coupon payments. Now, why are bonds important? Well, they bring balance to a portfolio. While they may not offer sky-high returns like some other investments, they provide a degree of stability and predictability. They're the tortoise in the race, slow and steady, offering a reliable income stream. Let's talk numbers. As of the end of last year, the global bond market was valued at a staggering $129 trillion. That's a testament to the trust investors place in bonds. So if you're looking for an investment that offers a blend of safety and steady returns, bonds could be a smart addition to your portfolio. Bonds can offer a steady income stream for investors. Moving on, let's talk about mutual funds. Imagine a basket full of various financial instruments, stocks, bonds, and other assets. This basket represents a mutual fund, a kind of investment vehicle managed by professionals. You, along with hundreds or even thousands of other investors, pool your money together to buy shares of this basket, gaining access to a diversified portfolio that would be difficult to assemble on your own. Mutual funds offer several benefits. They provide diversification, professional management, and convenience. However, they also come with risks. The performance of a mutual fund depends on the market conditions and the skill of the fund manager. According to today's data, the average annual return for mutual funds over the past decade ranges between 6 to 8%. However, remember that past performance doesn't guarantee future results. Mutual funds allow you to invest in a diversified portfolio with less money. It's a way to dip your toes into the investment world without needing a ton of capital. Another great investment option is real estate. Investing in real estate involves purchasing properties, either for resale at a higher price or for rental purposes. It's a tangible asset that in the long run typically appreciates in value. Now, let's delve into the potential returns. Historically, real estate has provided excellent rates of return, often outpacing the overall market. Rental properties, for instance, can provide a steady stream of income while also appreciating in value over time. But like any investment, real estate does come with its risks. Market fluctuations can impact property values, and unexpected expenses related to maintenance and repairs can eat into profits. To give you a sense of the market, as of this year, the average annual return on real estate investments has been about 6%. Remember, investing in real estate requires thorough research and careful planning. But with the right approach and due diligence, real estate can be a profitable investment strategy if managed well. Now let's discuss ETFs or exchange-traded funds. These are investment funds that trade on stock exchanges, much like individual stocks. They're designed to track the performance of a specific index, sector, commodity, or asset. This could be anything from the entire US stock market, to gold, to global real estate. ETFs are popular because they offer a way to diversify your investments without needing to buy each individual stock or bond in an index. Plus, They're often more affordable and liquid than mutual funds. But remember, while ETFs can provide broad exposure, they also carry the risk of market volatility. Recent data shows that the global ETF market exceeded $7 trillion in assets in 2023, demonstrating their popularity among investors. The top 3 ETFs by assets were those tracking the S&P 500, technology sector, and international markets. ETFs can be a simple and effective way to diversify your portfolio. So if you're looking for diversification with ease of trading, ETFs might just be what you're after. Next on our list is the hot topic, cryptocurrency. Now, cryptocurrency is a type of digital or virtual currency that uses cryptography for security. It operates independently of a central bank, making it a decentralized form of finance. The appeal of cryptocurrency lies in its potential for high returns. Bitcoin, for instance, started off worth less than a penny and is now valued at thousands of dollars per coin. But remember, with high potential returns come high risks. The value of cryptocurrencies can be extremely volatile, swinging up and down by large percentages in a single day. As of this moment, the total market cap of all cryptocurrencies combined is in the trillions of dollars, demonstrating the significant interest and investment in this space. However, it's crucial to do your own research, understand the market, and invest wisely. Cryptocurrency is a high-risk, high-reward investment option. And there you have it, 7 best ways to invest your money. We journeyed through the promising landscapes of stock investments, bonds, mutual funds, real estate, ETFs, and the exciting world of cryptocurrency. Each presents unique opportunities, but also comes with its own risks. It's crucial to delve deeper, do your own research, and most importantly, consider your risk tolerance before jumping in. Remember, the best investment is the one that fits your financial goals and risk tolerance. Happy investing!